Well, before the break, we were talking about the big deal that took place. Viacom18, which is a controlled subsidiary of TV18, is now the owner of Jio Cinema's OTT platform. Karan Taurani, the Senior Vice President-Research Analyst who tracks the sector at Elara Capital, joins in now. Karan, thanks a lot for joining in. How do you read the change in the deal contours? Now Reliance will own majority stake. And what is your view on, the TV18 group, the stocks as well going forward?
Hi, Sonia. Morning. So I think the deal contours change, is pretty much, in line. Basically, what happened here is that if you look at the valuation that, Viacom was ascribed was close to 33,000 crores. And I think that was a slight premium in terms of valuation multiples, as indicated earlier as well. And, if you want to actually get Jio Cinema on board and, actually merge it with Viacom, it makes sense, for Reliance to basically, have a higher stake here. And that is what has happened. Now, in terms of, the bigger question here is that, how will things move from here on going ahead? I think Mr. Uday Shankar is going to join the board of Viacom. And definitely you will see a lot of changes in terms of the way TV18, in terms of Viacom, the entire, media business is kind of functioning. So I think that is, something to watch out for because Mr. Uday was actually the brainchild, for getting Star that kind of success. And even today, if you see, Star is the market leader as far as linear TV is concerned. So if he is able to replicate this or not, I think that is a bigger thing that we need to watch from here on going ahead.
Okay. What about on the ad revenue front? There's a growth capital now of 15,000 crores. How do you see the dynamics change on the ad revenue side? Currently, I think Zee Sony hold about 52% of the market. How do you see things change now?
Yeah, so if you look at the ad revenue front, I think Zee, Sony, and Star, both these players hold together close to 53% of the market, within which Zee, Sony are somewhere close to 20 to 23%, and Star would be somewhere close to 27%. Now, if you look at TV18 as a network, they hold only about 12% of the ad market share, and they are the third largest if the Zee Sony merger were to happen in the near term. Now, the only problem with broadcasting business has become that this business growth rates have converged significantly, which is why you're seeing players going for consolidation, right? I mean, unless you don't have that scale, unless you don't consolidate, unless you don't operate at a larger size, you will not be able to get benefit of this industry because growth rates are clearly converging. You are seeing shift to digital. You are seeing, the threat from social media, YouTube like aggregators, everything put together. So just to give some numbers in perspective, until about FY16 to FY20 in that range, or rather pre-COVID, the industry growth rate was around 10 to 11% for TV industry. If you take the ad and the subscription revenue, that is kind of now become flattish in the post-COVID era. So you are seeing a lot of changes right now, a lot of disruption right now on the linear TV side. And I think it's going to be a challenge, actually, rather for TV18 to really scale up the offering if the Sony merger were to happen, because this market is going to get more and more consolidated, and the larger players of the market will continue to have a lion's share.
So, there's also this news flow, right, that Jio Cinemas has deployed almost 2,000 crores in its war chest to take on Hotstar, Netflix, and a lot of that content is going to be regional as well. I want your thoughts on this. This regional content push on OTT, is it likely to give Jio Cinemas an edge versus the others?
Absolutely. I think Jio Cinema, firstly, they have got this big edge because of IPL coming on board. I think IPL is the most expensive or the most compelling property with a very large viewership, so to say, on OTT platform. And they've already, started off very well, by getting that content on board. Second thing, I think regional definitely is the future ahead. So if you look at most of the OTT platforms today, even the global giants for that matter, close to 50% or 60% of their budgets and new launches are coming towards regional. Because if you look at OTT as a business, I think the English genre has kind of plateaued out in terms of penetration. Hindi is now starting to take off, but regional, there's a huge untapped opportunity. So because of this growth opportunity, regional, I think, is definitely the next big thing. And Jio Cinema will definitely, try hard to get in the regional. Plus, I think Jio Studios has also announced some 100 new launches, which are web series, movies, everything put together. So this just goes to show in terms of, how they're going to come very strong in this OTT business. And I think they're going to give a tough fight to Netflix, Amazon, and other incumbents which are there. But I think the problem here is, they have got the advantage of capital, which gives them the advantage around content investment. They have got the advantage of distribution as well because of Jio. I think user experience is a bigger issue here because, for OTT businesses to actually scale and sustain, user experience needs to actually be off the curve. So I think if they're able to improve on that front, I think Jio Cinema could be one of the largest apps play in the country.
Okay, all right. Let's also shift focus to what's happening with Zee Entertainment, right? Over there, Oppenheimer is selling about 5.5% of its stake. But in general, I wanted your thoughts on how one should approach the stock now.
So if you look at Zee, it was very much expected that Oppenheimer will eventually, sell off the entire stake, and that actually came in phases the lock-in expiry date, which was there as per the arrangement with Zee. Now, if you look at this stock, I think the only trigger for the stock remains to be the NCLT approval. Now, there was a hearing on the 13th of April, which apparently, has been slightly longer as compared to the earlier hearings, which actually is good news. The next hearing is poised for the 24th of April. Our estimate is that maybe in the next 3 to 4 hearings, if things go as per plan, you will see the merger approval coming in. But that is all provided in terms of what happens with IDBI, because we believe that unless the IDBI issue is sorted through a legal outcome or through a settlement, the merger approval will be tough to come in. So I think in the next couple of months, if the NCLT merger approval comes in, there is definite respite on the stock, and you could see an up move in the range of 25%. Because the valuations even right now are compelling. If you look at the valuation standpoint, they are somewhere in the range of 12.5 to 13 times PE.
Okay, Karan, thanks a lot for that. Thanks for talking about the entire sector and all the latest developments there. The market has seen no respite